Welcome, and thank you so much for clicking on my video. As you can see, volatility was up by more than 10% today. That tells us there's an 85% chance for an update in the next two trading sessions. That being said, the bears did some critical things throughout the session today, able to clamp down and close below the monthly expected move, below the weekly expected move, and see a blip down below these levels, which is very critical. But we've already talked a little bit about this, so if anyone out there is thinking that this is the best time to bet on some kind of stock market crash, we're going to talk about that in today's video. We're going to get in depth into the shorter time frames and get you guys some daily expected moves, so let's get into it. So there are a couple of things going into this, right? We'll touch on volatility in a bit, but it is up by 10%, which means we have a very high likelihood to bounce. Weirdly enough, look at this bar right here. You have an 85% chance to bounce with volatility on this bar right here for the SPY. It's funny, it looks almost identical to this one. I mean, look at these bars. They are almost identical. This one a little bit more aggressive. So you would expect volatility to be popping off. So I'm going to blip over there and just be like, well, that moment, volatility is lower than that. So immediately it kind of makes me go, man, we should see volatility scaling up to like 36 at this point. We should see a big pop off in volatility if we're really going to be crashing here. It doesn't seem like the big players are really thinking that this is some massive bad thing. It really doesn't. We're still remaining at lower levels in volatility from back in these times, even though we're making a new low. So I just wanted to point that out. The other thing I wanted to point out is what we were discussing in yesterday's video. I'm going to double down on it today and say, look where you are according to the week, according to the month, and according to what VIX is telling you for the next two trading sessions. We can keep going to that downside. The bears are in serious control, but we still want to see what? Left head and potentially a full right shoulder. That means that we are very likely to bounce in this area, not only from the perspective of a pattern, but from the perspective of our weekly and monthly expected moves. Your monthly expected move is saying you have a 32% chance to close here with a 68% chance to close here. Your weekly expected move is saying the exact same thing. So this is why we talk about decision making and how just these simple lines on the chart can help you most of the time. There are times where you actually do crash. There are times where things get ugly. There are times where things break in the system and you will violate those levels. But normally, as a trader with a longer career, you do not want to be making those big short or put long positions at these levels. You want to be making them at up high, see a bounce, make them up high. Maybe you saw this and you took it up in these areas. That makes total sense. So let's get into those 2-hour time frames, because did we violate everything here? The answer to that is no. So let's get you guys daily expected moves. As far as tomorrow goes, big amount of implied volatility. Again, 663.27 to the upside, 641.75 to the downside. A lot of stuff going on here, okay? But the main thing to pay attention to for the 2-hour chart is the divergences for the RSI still held. There is still a glimmering piece there. There is a piece here that says that that right shoulder is going to go wrong and that we are going to go to new all-time highs. I have to tell you that because that's what this RSI is saying. That being said, the RSI doesn't have much backing it right now because the price action looks really bad. And two, the MACD is not showing it at all. So if I was saying like, hey, we're going to 700 now, you know, with this day, with this price action now shown to us, it would be a little bit more risky. It would be a little bit less probable than it was just a couple of days ago. That being said, it's not impossible. The RSI is showing you how it is not impossible. Now, is the 2-hour very likely to curl up here? Because we don't have to talk too much about the bear side. The bear side is we're rolling, right? We go up, we roll. We keep rolling on this 30-minute while you're going to keep seeing that downside as you are in negative territory. But as I click into the 30-minute, you might see something interesting. Yes, we just showed you that there's 2-hour divergence where outside of your monthly and weekly expected move, which means 68% chance to do this, 68% chance to do that by the end of the month with reversal signals, not confirmed. Very clear there, not confirmed. But if I see a look like this, and I have those bear positions, and maybe I took it here. I've been playing these little rolls and stuff like that. And I see that we're down by the lower expected move with another week left in the month. I see these divergences on the 2-hour and 30-minute scale, and I see that they're formed, they're not confirmed. That means maybe I can ride this wave for a little bit, but if I ever see that curl back up and that divergence point stays intact, I need to be very clear to react here, because that means that we're going to go for an attempt most likely to get to that trend line on the 2-hour chart. So I wanted to make people very aware of this. There are reversal signals at the lower monthly expected move. Even with the terrible break I see the terrible break. I'm now looking for that big right shoulder. If we are going to crash down here, oh well, who cares? It's just like that happens. High volatility, you will see bounces, and we will still continue to monitor this market and look for those opportunities now that we know if we're going to continue in that downward direction and we do not confirm any of these divergences. We do not confirm any kind of retest here, but head to the downside instead. We will be doing all of our homework exactly the same, and we'll just be flipping things around and playing some kind of downtrend. So let's go over to the Qs and see what they have to say. We're going to do it a little bit backwards for the Qs, but you can see they broke the critical level as well. So this is very, very rough looking and very good looking for the bears. Actually, you see the rolls. We see the rolls. We see the rolls. They're very, very nice. The only thing here is you were able to make a new high here. This is very interesting to make a new high and then give it all up. So this means that most likely the news that actually came out today was very unexpected by the market. According to the price action and a lot of what's going on with these moves, it would really say that not a lot of people were ready for that potential news. But that being said, if this curls up over here, you have to be very aware. You have these lines, this 598.64, you have 572.68. This is pretty simple. If it's really that bearish and we're really crashing down, any kind of little bounce should roll down. We should end up at the daily move, or you just end up going straight down to that daily expected move. That's what would be very likely as the bears are in control. But if you see this 30-minute curl up, do not think that that little curl up's just going to crash down on Monday and all these, people who are potentially going to be making crash videos to get a bunch of views over the weekend. I don't think that they will end up liking what happens next, because it is very, very likely that this 30-minute divergence does mean something. It means the 2-hour needs to bounce to the upside. It means this 2-hour that is holding barely divergence here on this RSI and not holding it anymore on the MACD. Very, very weak signals. It would still suggest to be cautious opening up positions below the monthly expected move. Now, that's just what these things overall tell you, right? You are lower percentage chance to close the month in here than up here. We have got some surprising news, though, so you have to take that into consideration. But you still have those 30-minute signals, so just be aware. If the 2-hour is able to curl up, we are looking for what? We just broke this low, so we are looking for left, head, and then that right shoulder over in this area. If we are able to see some kind of 2-hour upward move like this, and we are able to roll that move in December, that will not be a good look for the market. But notice we are talking about a bounce, even if it ends up bearish. You still have some of those 2-hour signals from the SPY. You still have some of those 2-hour signals from the Qs, and you have 30-minute signals suggesting they could turn up, meaning these things do still have a chance to go to new all-time highs even with this break. It is lower. It is much lower now. It is much more likely to create that right shoulder. But as of right now, you have to take it with a grain of salt, because you do have those kinds of signals flying around there. And I have to mention it to you because I'm an honest guy. VIX is saying the same thing. This is why I have to bring it to your attention, okay? You do see these highs in here. And this is what I mean by the market totally was unexpected by this, because what we talked about yesterday was happening, right? We were breaking through the low. We broke through these levels right in here just barely. And what were we going to do? We're going to break through those levels and do what? Create the right shoulder that could have been. And we're going to do this, and we're going to turn to the downside. Instead, we see the skyrocket up in volatility. So that just tells us, hey, most likely no one saw that coming today. Very, very likely. I bet a lot of fade day traders really like today, but overall, you still created potential triple divergence here on your RSI and a single divergence here for your MACD. So you do have reversal signals from the SPY on the RSI. You have them from volatility, and you have them from the Qs all at the same time, down by the monthly expected move. The other thing that's very fishy here is, even though this looks much worse and has actual really bad news behind it, remember how we discussed how bad news is going to slowly become good news soon? Well, we were not even able to break through. So we broke through this level in the SPY. When we hit this level for VIX, we broke through that level today for the SPY, but we're lower. We're lower than that point. So this is very, very interesting to me that VIX is not overall going up to 36 at this point. If this is really that bad, if this is really, really that bad, we should be seeing at least a new high here from the overall what you would call daily trend for volatility. And I'm not seeing that, but I am seeing one thing from volatility, which is it is up by more than 10%. So regardless if we're going to maybe see a bounce and roll, regardless if we are going to see a full reversal, the VIX is telling you that Friday or Monday, you are going to see a bounce from the SPY with an 85% probability. And so I want to bring that to your attention. As of right now, VIX does have a divergence formed, which means there is an opportunity for this to be a full reversal, meaning volatility gets clamped down on. The other thing we need to tell you about is the other side as well. As of right now, the way volatility is positioned, the 30-minute would want to continue its trend. It is not suggesting that there is some kind of major divergence here for the 30-minute. This means in the short term, we could see another little drop, but by Monday, we could see some kind of bounce, and that bounce will tell us a lot. That bounce will tell us two things, and we're going to go to the SPY and sum it up right here. This bounce that potentially is coming, right? If we're not going to crash down and these monthly expected moves and volatility are all going to get the percentages right, then that means we are going to see some kind of bounce here. If that bounce is lackluster and we roll, that is not a good thing. If that bounce is aggressive, but we roll, that will still be a very, very scary thing. You'll want to monitor very closely at that point with that stronger move. But that being said, there is still a couple signals out there that are saying, don't sleep on the fact that we could see an uproar here with all the bearishness going on. Remember that we have been in fear for a long time. We've been in extreme fear for a while throughout this drop here. And we really haven't dropped that far, guys. We really haven't dropped that far. And normally when you are seeing extreme fear, you are closer to a bottom than you are to a top, unless something bad happens, right? You've heard me say that. You have to get actual bad news that really makes the big players sell. And the reason I'm going to mention that at the very end here is volatility is not popping off. Volatility is not making a new high. So be very, very cautious thinking that buying a position for downside right here is the best move, when it is very, very likely that you're going to see a bounce first, and then you could get that position at a better time to play a leg down. Okay, so I just wanted to point that out to you guys, talk about some decision making, give you guys some daily expected moves. Patreon members, we will have the rest of the daily expected moves for all the stocks that we cover over here. We're going to touch on Microsoft, but I think we'll leave that overall for maybe a Patreon video tomorrow when we can get up those monthly and weekly expected moves. Hey, thank you guys so much for watching this video. I hope that this is helpful for you in some way. Congratulations if you are able to make money on this in any kind of way today. If you are a day trader and you executed very, very well using the daily expected moves, you're probably a very, very happy guy today. Thank you so much. Have a great rest of your night. All right. Peace out.